Critical Man Pictures presents the Forex Video Training Series. Black Belt, Second Degree, Trade Guide to Major Economies, Japan. Konnichiwa. Located in East Asia, Japan is an archipelago of 6,852 islands, although the majority of its landmass is accounted by the 4 largest islands. Despite being a relatively small country, Japan's capital, Tokyo, is home to 30 million hardworking citizens, making it the largest metropolitan area in the world. Also, even though Japan is densely populated, the Japanese have one of the highest standards of living, while also having the highest life expectancy in the world. Japan is also one of the most advanced and tech-friendly countries in the world. Can you imagine a world without the karaoke, the Game Boy, or the Prius? That's right. Didn't think so. Also, did you know that the Japanese characters that make up Japan's name mean sun origin, and that Japan is often referred to as the land of the rising sun? There are just some overview items here if you want to peruse. The economic overview. Aside from being the video game capital of the world, Japan's economy is ranked as 3rd largest as of 2009. Since the end of World War II, Japan has been on a rampage, experiencing rapid economic growth despite the fact that the country is mountainous and volcanic. Because of the laws of nature, this limits the growth of the natural resources in Japan. In order to make up for this lack of resources, Japan's economy has become very export dependent, without exports amounting to almost $500 billion in 2009. This amount is equal to 40% of their total output. Recently, Japan has been riding the coattails of China's massive growth. With Japan being the nearest major economy, Chinese demand has led to massive shopping sprees of Japanese products. Not only does Japan have great food, how can you beat tempura and sushi, of course? It is also home to one of the world's biggest financial centers, Tokyo. As you see in the movies, Japanese businessmen mean serious fucking business. With so much money flowing in and out of Tokyo every day, traders and investors could use Japan as a proxy for what's happening in the Far East. While the Bank of Japan, BOJ, has been around since the late 1800s, only recently did the BOJ gain independence from the Ministry of Finance, or MOF. It was only in 1998 that the Japanese government passed laws giving the BOJ control over monetary policy. Take note that the Ministry of Finance still remains in charge of foreign exchange policy, which has led to tension and continuous differences between the two. Normally, the government and central bank are independent of each other. One should not have any influence over the other. This is not the case for Japan. Even though the Bank of Japan has gained independence from the government, there is a question of who really wears the pants. The Ministry of Finance has kept a watchful eye over the Bank of Japan, pressuring it to pass policies that would help the yen hit the MOF's foreign exchange targets. Similar to other central banks, the BOJ's main objective is that of price stability. The ninja bankers at the BOJ make use of open market operations and interest rate changes to meet their goals. One thing you should know about the Bank of Japan, for a very, 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 very long time, they have kept rates at low levels, with the current level sitting at a measly 0.10%. Because this rate is already so low, the central bank cannot decrease the rate to stimulate growth or create liquidity. For instance, in its efforts to fight deflation, the BOJ has whipped out of shurikens and has flooded the markets with money through unorthodox quantitative easing measures. Quantitative easing measures are moves made by central banks in order to increase liquidity and money supply through the purchase of government securities. This is sometimes called printing money, because the central bank literally creates new money from thin air in order to buy back their government securities. In theory, the increase in money supply would lead to an increase in lending and spending. Over the years, Japan has created liquidity in the markets by flooding the economy with various programs that let the BOJ buy or sell Japanese government bonds and bills. The yen is so hardcore that it didn't want to be named anything else. It came to the foreign exchange market called the yen, and up until now is still called the yen. The yen is the yen is the yen. It is also tied in currency crosses, especially against the euro, pound, and Australian dollar. After the US dollar and euro, the Japanese yen is most heavily traded currency, with dollar-yen also ranking as the second most traded currency pair. Because of the role that Japan plays in international trade, there is need for the yen in order to compete with international transactions. When investors think of Asia, they subconsciously think of Japan. With Tokyo being one of the world's major financial centers, Japan is often representative of what's happening in Asia. Japan is normally a major trading partner of other Asian powers. If business is doing well in Asia, this is normally reflected by the Nikkei, the major stock exchange in Tokyo. When Japanese reports come out during the Asian session, it is only natural that the yen trading is most active during the Asian session, 0 GMT. The yen can also be active in other major trading sessions depending on what economic data is being released. This should be expected. It is part of Japanese culture. They do business around the clock. With many investors looking for the most bang for the buck, some have resorted to the carry trade. With the yen having the lowest interest rate among the majors, it is normally used in a carry trade as a funding source. Japanese asset managers tend to make the same investment decisions. This leads to highly correlated positions, which means it is likely to see trends develop. One characteristic of yen pairs is their tendency to consolidate for quite some time, then break out in a direction, then consolidate again, and break out again. Keep your eyes and ears ready because you never know when this might happen. With China emerging as a major power in the world, its influence over the yen will continue to grow. As signs points to further growth in the Chinese economy, it may affect demand for the yen. How so? As we said, China is one of Japan's major trading partners. Naturally, as Chinese businesses boom, they will need in order to buy more. This in turn would increase demand for the yen, causing it to appreciate. Some of the economic indicators: the gross domestic product. This measures the economic activity of Japan. It indicates whether the economy is red hot or in the process of hara-kiri. The Tenkan-sen surveys. These reports survey managers from a broad range of industries, question them on their views of the economy. Rising sentiment, scores above 0.0, indicate that Japanese businessmen expect business activity to pick up. Scores below 0.0 suggest otherwise. Trade balance. The Japanese economy is heavily export dependent. Falling export numbers could lead to a decline in economic activity. The unemployment rate. This measures the rate of unemployment in Japan. High unemployment could lead to a decline in consumer spending. How would they be able to afford their video games and anime? The Consumer Price Index, or CPI. In the past, the Bank of Japan has shown that they are not afraid to fight off deflation. If trends show that prices of samurai swords and shurikens continue to fall, they may lead to surprising moves by the BOJ to intervene in the market. Core machinery orders. A large chunk of Japan's export are comprised by machinery orders. The rise or fall in core machinery orders could reflect the current status of Japanese trade. And what moves the yen? Due to its low interest rates, the yen has been considered a good funding source for investments in other countries. This means that if traders or investors are scared, they will begin to unwind their positions in higher-yielding assets. Once traders start unwinding their riskier positions, carry trades, they have to recover their short yen trades by buying back the currency. This doesn't refer to the announced scheduled effects. I'm talking about currency intervention. The BOJ and MOF keep special attention to the FX markets. With the Japanese economy being very export-dependent, the value of the yen plays a key role in trade. The BOJ doesn't want the yen to appreciate too much because it would make Japanese exports relatively more expensive. By keeping the value of the yen lower, they can stimulate demand for Japanese products, which in turn would benefit the economy.